Good morning, this is John Piper with the weekend video clip, and it's Saturday the 18th of January, and I'm going to start off today with part of my presentation that I'm planning to give next week in Singapore, as long as my voice holds out. IG Index have organised a sort of trading seminar, and it's sold out, which is rather nice. I didn't know we had so many fans in Singapore. I know the way to trade has been published in Chinese, but I didn't know how far it had actually got to. Anyway, the seminar is called Market Outlook 2014. Maybe the success of the sellout is more due to the title than the people giving it. I don't know. Nor do I know whether you can actually call a free seminar sold out. Probably technically you can't. Anyway, hopefully my voice will in fact continue to improve and not get worse, and the seminar will be a great success for all concerned. At least that's certainly what I would like to happen. Anyway, let's have a look at the charts in the order they're here. So we'll get on to. It's refusing. Oh, there we go. Okay. This is actually Bill Adlard's chart, which you should all have seen this before. So sell US Dow. Question mark. Question mark means that we need a clear signal. So these are setups, not actual signals at this point in time. You go back to the low down here, which is the 1929. Sorry, the high is 29 up here. This is I think 32, 33. We'll just clear this. So we have wave 1 here, and have a 2 there, a third wave there. Beatles sang help around here. So we had quite a big bear market in the 60s, 70s, especially in the UK, where in 72 we had a major collapse. So that was the fourth wave. At that point there was real growth up into the 60s. There was real tangible growth. Got a little less real and tangible back up into the 80s and 90s and noughties. So that counts well as a fifth wave, but it's still staggering on, more by financial invention and machinations rather than maybe reality. I mean, certainly I think the pricing system, the pricing structure on the right of the chart is being distorted by QE, as I've been saying previously. Anyway, what we're seeing now, you notice that Bill's Gann lines caught this beautifully. They're now very similarly set up actually for the current situation. But we haven't actually seen, well, we have of course seen the fall back there. I mean, it's all about what happens at the lines. Can we go higher here? I mean, obviously we can go higher here. The markets can do what they want to do. We could just continue to go up. There seems to be little value in the market in the sense that you buy a stock at this point. The potential downside is a lot more devastating than the rewards, the upside would seem to be available. But these things don't necessarily relate to reality and how it might behave. So it all depends what happens at these points. On the Dow, there's no particularly clear shorter-term signal in place at this point in time. Now we look at the FTSE. We have got a slightly more worrying shorter-term pattern where there is something to be, there is a case for a bear. We actually peaked in May on FTSE. We saw 5 waves down very clearly. Since then we've been dithering within this trend channel. It could be a rising diagonal. It's not clear in any sense really, but here's a 1, 2, 3, 4, and now a fifth. It actually subdivides into a 5 itself. We'll look at that in a minute, more detail. So there's a case there that one more peak here could be some significance. Let's go to the next slide actually to probably make it clearer. So here's the shorter term action with 1, 2, 3. Now it's a pretty extended fourth down to there, followed by a 1, 2, 3 to there. If we switch to 10-4 here, we can see the fifth wave itself in 1, 2, pretty 3, I guess. I mean, there's a couple of spikes yesterday on expiry.